Hello, guys. This is Victor with a new market update for the week of 27th of March. And let's look at our signals for this week. There are no changes. The long term trend remains negative. The short term trend remains negative since back in February. Macro remains negative and sentiment is neutral. So, no changes. And let's go to the charts right away. So, let's start with the longer term time frame with and let's take a look at my model. So my model has three components: the technical trend component of the index itself. I use the Nasdaq composite, and also then the breadth of new highs versus new lows, and the amount of stocks that make up the Nasdaq composite that are in a primary uptrend. So when two components out of the three that I use are positive, my signal turns bullish, and vice versa. Currently, we have two components that are negative. The trend of new highs versus new lows, it's negative. We see that new lows are dominating, and also the amount of stocks in a primary uptrend is only at 35%. So most stocks are actually in a primary downtrend. We got over 50%, which is the trigger back in January, but with the correction we experienced since February, that the breadth started to drop, and now it's only at 35%. So basically, the only component that's positive is the technical trend of the Nasdaq composite, and we can see that the same thing is happening in the Nasdaq 100. And this week, the S&P 500 recovered its technical uptrend. The other indices, like the Russell 2000, clearly in a negative trend, and the Dow um, also below its 200-day moving average, so in a technical downtrend. So the breadth, um, the amount of stocks in a uptrend is very limited right now. There's just a few bright spots, and usually when that happens, it's a negative. It's not a good thing for the market. Only just a few stocks. Um, most indices are um, weighed by capitalization, and stocks like Microsoft, um, which is a huge stock, 2.1 trillion, and Apple are holding on well, 2.5 trillion, and that skews the indices. But most the normal stocks and especially small caps are not doing really well. So the market is being held by just a few stocks, and that is technically not a good thing. Um, it kind of reminds people. I've seen FinTwit talking about it that about late 2021. And here we see that the Nasdaq Composite, the index itself, it was in a technical uptrend, but here we can see that most stocks were already in a primary downtrend, and also the trend of new highs versus new lows was dominating. Um, so, and then we got the bear market of 2022. Here we we seem to have transitioned into a new bull market, or at least a primary uptrend, and we failed. So here, are we gonna start dropping again, kind of like what happened here, or is this just part of the transition from the bear market to a new bull market? We don't know. We basically the market has been flat since May, very volatile, very choppy with some big rallies, some big drops, but all in all, in the same level. So we've got a lot of bad news um, in the market, and still we're not breaking down. And I think that has mainly to do with central banks that um, with the banking crisis and news, they stepped up. All of them coordinated. We got an announcement that they were gonna do emergency lending facilities and whatnot, and help out the banks. And I think Janet Yellen said that basically she's gonna help the banks if they need more, 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 more money to insure deposits. So you know they're not they seem that they don't want this to get out of hand, like it got back in 2008. So that is helping the market stabilize. Doesn't mean that the market's gonna you know lift off from here, but even though technicals look bad right now, we're not breaking down. So it's a very selective market, very opportunistic, and you know we have to take it day by day. But when things get bullish again, you'll have time to react and position yourself accordingly for to enjoy a longer term trend as we got here in 2020, 2022. Um, and here we can see the short-term trend. So similar to what I was saying just before, um, most stocks are not in a short-term uptrend. We can see that the Nasdaq Composite is also the QQQ, but here we can see that only 21% of industry groups are in a short-term uptrend, which is it's not you know that's another way to see the weak breath we are experimenting. Here when the market really got going back in January, we see that the amount of industry groups in a short-term uptrend went above 50% right here, and then we got a really nice rally. The same thing happened over here. Some choppiness, but we still made a good move to the highs, and we got a similar thing back here. Back in June, July, we crossed that 50% threshold, and then the market enjoyed a nice rally higher. So this market's being held by very few stocks, but it is what it is. You can, you know, trade the trend in those few bright spots and take it from there. If we look at short-term chart, this is a 65-minute chart. We only have the XLK, XLC, and XLP in a short-term uptrend. Um, I wouldn't say it's a buy here. It's a bit extended from its moving average, but if we get a dip and the market holds, then it could be a good entry. In XLK, XLC, similar, and XLP we flipped to a short-term uptrend just recently. So the risk here is basically 2%. If you can use that low as a stop, you could also wait for a little bit of a pullback to get a better price and have less risk. But this is a sector that's getting firmer. We see that we have some lower highs. I mean higher highs and higher lows, which starts to make an uptrend. So this is a sector that's getting more bullish. Also, here we see healthcare, which has been pretty beaten down for quite a while, but it seems to be stabilizing around this 125 level. So this sector could flip into a short-term uptrend in the few days. And also XLY, here we see that we've held the lows and started to make some higher lows, some higher highs. So if we could get something like a couple of days of consolidation here, and we could get that short-term trend to flip positive and get a nice entry in with a tight risk. But that's basically what's working right now. Not too much. Some sectors actually are looking pretty weak. like real estate, and actually made new lows recently. So that's what I mean. Weak breath, very thin market, only three sectors in a short-term uptrend. Maybe a couple of them might flip positive, but very selective, very opportunistic, and there's a lot of news-driven action, so you can't really have a lot of conviction or expect to make incredible things happen in the current market environment. Um, what else? Well, macro. Oh, here, weekly macro. It has kept on improving. We see that the 20-week trend has been moving higher for 7 weeks now. So one more week, and actually the signal will flip to neutral. And if we get the weekly leading index above zero, that would be a real positive, and that would flip the signal to positive. And sentiment after the extreme greed signal in January, we sold off. We sold off in the market pretty hard, and with that sentiment, and now it's actually below 50, which is neutral, starting to get a bit bearish. If we get back to extreme fear levels, last time we got there was in late September, early October. Uh, we'll see, but currently nothing. We're not getting much from sentiment. So, well, I hope you have a great week. Um, I hope you like the videos. I'll get better in time, be a better narrator for you guys. So send your questions, your comments, your feedback, and oh, also follow me in Twitter. I post quite a bit in Twitter, and you can get more timely updates. More here. This is my Twitter at the Global Trader. This is me, and here you can get a little bit more commentaries and you know daily commentaries or things that I'm looking at. So follow me there, and well, I'll see you soon and have a great week.